I mean, look, I always joke with people like investing in crypto, it's a weird balance where like if you're a venture capitalist, you need to be optimistic, right? Like you need to think things can be big. And if you are doing this in crypto, you both need to have that underlying optimistic attitude. You also need to have a somewhat like irrational view of just like, I know that something here is going to work and it is going to be bigger in 5 years. I think like any crypto venture investment, you are kind of underwriting that like the market size at least 10x is from here. At the same time, like I believe most people in crypto are full of shit, and like that has like generally served me well. And I don't know that it's anything like underlying crypto that is bad, but like you just introduce an industry that's like largely unregulated. It's been a great place to make a buck quickly, and like that attracts a certain subset of people.
Hey everyone, this is Prashant and I'll be your host for the VC 10X podcast. And today we have Regan Bozman with us. Regan is a managing partner at Lattice Fund where they're investing in pre-seed and seed stage crypto startups. In this episode, we talk about what got Regan into the crypto industry, how they evaluate crypto startups, biggest challenges facing the crypto industry, and lots more. So without wasting any time, let's dive straight in. Hey Regan, so good to have you on the VC 10X podcast. How are you doing?
I'm doing great. Thank you for having me.
Yeah, pleasure hosting you. To start things off, can we first have your story and how you started and got into the crypto industry?
Yeah, absolutely. So I was kind of always interested in like tech and startups. Like had a few internships in college, and then after I graduated, which is about 10 years ago, and I feel quite old saying that. Went to work at a tech startup in New York, but then the journey into crypto starts about 7.5 years ago. I moved out to San Francisco for a job on the deal team at AngelList. And for people who aren't familiar, AngelList does a number of different things, but kind of the business line I was working on was marketplace for capital, like into early stage startups. So basically, just like try and help startups raise money. And about a year and a half after I joined, we ended up spinning out this company called CoinList, which is sort of building a similar business around capital formation, but in crypto. So making it like easy for crypto companies to kind of raise money in like a compliant way. And so a lot of similarities, like a lot of kind of on the product side, somewhat similar business, but very different in how companies wanted to raise money. And so we decided to kind of spin that out as like an independent entity. And so I followed my boss, who was the COO at AngelList, to CoinList. And yeah, that's kind of how it started. And that was about 5.5 years ago, which feels like a very long time because crypto is really it's crazy, and time kind of operates on a different scale.
Yeah, totally agree with that. And let's talk about how you look at the current state of the crypto industry, right? Because we have had certain events and different, trends in the market. So how do you look at it currently?
Do you mean like how like kind of optimistic? I guess there's a lot of different ways to look at it. Just how like optimistic or pessimistic I'm feeling on the industry overall. So
Yeah.
on the whole, I'm feeling optimistic. I can start with kind of like where I have reservations first. I think financial markets and venture capital like are kind of a history of bubbles, and I think crypto is kind of that, but like on a 10x, like liquidity happens faster, there's less regulation. It's always kind of crazy. And so I think that on the whole is good. Like I generally buy that like money flowing into industries. It can go to a lot of dumb stuff, but like if a few really like meaningful things get funded, especially if it's kind of like subsidized by just like VC money, like that can lead to really meaningful outcomes. So I think that is like generally good for crypto. But where I think it's bad is like when it leads to funding scams or Ponzi's or just things that lead to like zero, like they're not pushing the industry forward. And so I think right now we still have a hangover where, like, for example, there's are hundreds of games that raise money from VCs, kind of on this assumption that, certain like crypto economic incentives could like reliably grow game audiences. I think that like assumption is wrong. And that's not a controversial opinion. But there are a lot of like zombie companies that have a lot of money and just like products no one is using. So I think there's still a lot of kind of hangovers from like the last bull run that haven't really played out. There's also the U.S. regulatory environment, which I could talk about for like hours, we don't have hours, is pretty unfair, I think, in many ways to the industry. So I think crypto kind of always, right? Like you can be excited about things, but there is a lot of uncertainty on like many levels. Um, but I think you get back down to like why I'm excited, and I think you look at there's a lot of really smart people who want to work in the space. So I think just generally like smart young people wanting to work on something, it's kind of dumb to like bet against that. But I think everything from like in like decentralized financial products, you have things like GMX where like people just trade billions of dollars a day with each other in like a totally permissionless manner anywhere on earth. That is really cool. Like DeFi has not really made itself useful to the vast majority of people, but like these financial markets like did not exist 5 years ago, and like now they do, and it's pretty interesting. We've gotten really excited about decentralized physical infrastructure, where tokens is a kind of like a subsidy for growing the supply side of physical infrastructure. I think is kind of like a pretty revolutionary thing that we haven't seen before. And so you have a number of projects. Helium is probably the most prominent, where like these companies have scaled physical infrastructure quicker than anyone has in history. And like everything in crypto, kind of like a lot of the first ones are maybe not necessarily like focused in the right direction, but like I think it's shown that tokens can be a really interesting growth mechanic. So I'm excited, but definitely a lot of open questions as always.
Yeah, absolutely. And given all these uncertainties and Ponzi companies, how do you evaluate a company and make sure that you're not making a mistake and you're making the right investment? So, what are those things that you look for in a company for making an investment decision?
So for us, it's really like two criteria, and I'm going to say them, and they're going to sound like really simple, but I actually think this is like different than how a lot of people think. The first one is, will this team be here through multiple cycles? Like crypto, it sucks to build a company in crypto. You have these insane macro volatility backdrop. You have an insane amount of regulatory uncertainty. It's just not fun a lot of the time. So, all of the successes we had personally before we started the fund from an investing perspective, OpenSea, Dune Analytics, like really no one cared about these products for a long time. These companies really like they just grinded in a like not sexy backdrop for years before they were hot. So our view like is this team really, they need to be smart, they need to be motivated, they need to be able to execute against this vision, but they also like they need to really believe in this because it is going to be really hard at like various points in time. And I think that has led to us not making many investments in categories that like were hot. For example, like games. We met a lot of really talented game developers who'd like done cool things, but like I think when you got down to brass tacks and we spent time with them, it's like, all right, like if this like crypto gaming thing doesn't work out, like these guys are gonna go back to building like mobile games. And that's cool, but like that's just not what we do. So like just as an example, like we ended up not making a lot of investments in that category. Um, the second criteria for us really is like, is this team solving a real problem? Again, it sounds very simple, but crypto has been chock full of what's the saying, like nails looking for hammers for a long time. So, for us, for an example, like when we are like investing in an infrastructure company, something building, let's just say for crypto developers, we want to like deeply understand who are the first three customers of this product. How many conversations have you had with them? I want to talk to them. I want to understand how much they're willing to pay. Want to understand that this is like a very deep seated problem. Um, and I think that has also led to us like ignoring a lot of categories. For example, like, there's like, especially in the bull market, you could kind of take something like a lending protocol in Ethereum and like deploy it on Avalanche or kind of like some other blockchain, right? I think when you get down to like the deep seated understanding of that, like whose problems are you solving, right? And that's just an example, but I think there's really like you kind of ignore 90% of the market if you use that framework. And so, beyond that, we want to think about market size, we want to think about competition, but really like those are the two criteria we think about.
Absolutely. So you talked about the kind of categories that you're ignoring and for the right reasons. What are some categories that you're particularly excited by?
Yeah, so I think two categories we've gotten really excited about are new consumer experiences and then kind of decentralized physical infrastructure. On the new consumer experiences side, I think you look at what's happening in crypto social companies like Lens and Farcaster, and it's really cool. I think there's a lot of like buzzwords that get thrown around, censorship, blah blah blah. I don't think the vast majority of people care about that, but I think this idea of basically kind of having social graphs as like a protocol and kind of building different clients on top of that is actually really cool. And so I think about Ben Thompson, who's like a big tech commentator, has talked a lot about this in the context of Twitter, where, for example, like there are a lot of different people who want to have different experiences on Twitter, right? If you just want to consume sports highlights, you're really like looking at video. If you just want to consume politics, you're looking at like mostly text, right? And like those are actually like very different kind of like experiences and different content feeding into that. And so I think, you go to like how much of these crypto consumer products are architected, and there is like a core protocol where there's a social graph, it's portable, anyone can plug into that. You can actually build different clients and different user experiences for different like use cases on top of that. And I think we've started to see companies like POAP, which is essentially you mint digital stickers for like attending events. They've started to hit some meaningful scale. And just like the rate of innovation that permissionless software enables is really interesting. On the decentralized physical infrastructure side, we Helium is kind of the biggest example where basically this company wanted to build this mesh network for IoT devices in order to like incentivize people to put hotspots in their homes. They kind of like had this mining mechanic where you could like mine tokens early on. And the idea really is like if you have physical infrastructure, right, there is no demand for it unless it's at some scale. So we have a portfolio company called Demo as an example that is doing a similar model for auto data. So a lot of new electric vehicles in the US, you can actually stream a huge amount of data out of these vehicles through an API. And like Tesla is like probably the largest example of this. But there's never been an incentive for people to like share that data, even though it is useful for OEMs, it's useful for battery manufacturers. Like historically, car companies have just kept this closed. And so Demo is like building an open data marketplace. That marketplace, again, if you have 5 cars on it, it's not useful to anyone. But if you had 50,000, maybe it is. And so they've kind of subsidized like the initial, supply side of that marketplace with initially points. Now there's a token that's live. And they've been doing really well. So I think like those categories are pretty exciting right now.
Yeah, that's very interesting, and I think scale is maybe one of the challenges that crypto kind of faces, and the ability to go mainstream, because you also have to sometimes explain the tech behind it, right? And don't you think that crypto companies should not be marketed as crypto companies, but just market the use case that they're solving and just sell based on that, right? Or do you think that most, because if you're selling based on the tech or the back end of it, then you're going to serve to a niche audience who knows that, okay, this tech is useful, this is good, right? But for the people who don't know about it, right, you'll face a lot more difficulty to onboard them, right? Don't you think?
Yeah, I tend to agree with you. I think there's kind of two. I think there are products that purely want to go after a mainstream audience, and I think for that set of companies, that approach is right. Um, but I think for a lot of companies, if you're just trying to kind of find a group of early adopters, like marketing to a crypto audience can be pretty effective. Although, as you say, it definitely limits your market size. I think the challenge a lot of companies have had, kind of purely trying to abstract away everything in crypto, is just the user experience is like still not really there. There's a lot of like innovation happening. There's kind of account abstraction, which is this big push on Ethereum to make it much easier to like not have to use gas, not have to like use a seed phrase when you set up a wallet. I think that will make the user experience easier to abstract away. Um, but for example, Demo, they have a mobile app. They had this like point system initially. It really looks like normal software. You don't know about the crypto component. Now that there's a token, you kind of need like a third party wallet. It gets a little bit more complicated. So I think that like that last mile where it's like, you're actually interacting with tokens, the technology is not like 100% there to just make that super seamless. But I think it will be soon. I also think like going back to kind of like what we look for in successful projects, how many crypto companies are like really solving like a pain point for a mainstream audience? And like I would say like very, very few.
Yeah. Yeah, that's certainly true. Most of them are going after a niche audience or building in a community that knows about what they're building, right? So that's certainly something that's there,
Exactly.
right? But maybe is there kind of a bubble there that they are in that circle and they think that, okay, this is the market that I'm going to sell to? Is crypto,
100%.
yeah, right?
I mean, look, I always joke with people like investing in crypto, it's a weird balance where, like, if you're a venture capitalist, you need to be optimistic, right? Like, you need to think things can be big. And if you are doing this in crypto, you both need to have that underlying optimistic attitude. You also need to have a somewhat like irrational view of just like, I know that something here is going to work and it is going to be bigger in 5 years. I think like any crypto venture investment, you are kind of underwriting that like the market size at least 10x is from here. At the same time, like I believe most people in crypto are full of shit, and like that has like generally served me well. And I don't know that it's anything like underlying crypto that is bad, but like you just introduce an industry that's like largely unregulated. It's been a great place to make a buck quickly, and like that attracts a certain subset of people. So now, to actually answer your question, yes, 100%. You know, most crypto products today are just serving crypto users. And I understand why companies do it. It is easier to like just like break into that audience. But ultimately, like none of these are going to be venture scale outcomes if that audience doesn't 10x. I think there's a lot of like intellectually boring investing in crypto. It's like, oh, the bear market happened, so we're just going to invest in infrastructure because we know there's like always going to be some developers to buy this stuff. That's like to me, that's super lame. Like I just that does not excite me. So we've actually made some like very big swings on the consumer side this quarter. So for example, like we invested in Karate Combat, which is doing they basically have this karate league. It's really cool actually. And they're introducing a token to like govern the league, and it has kind of like really interesting gamification mechanics around basically like getting people involved in the fights. And it's I think this could be the most widely used crypto product in like 6 months, if it, you know, assuming kind of like they execute against their vision. There's a ton that could go wrong, right? It's not like, oh, we're just building this crypto native product for this like audience of 10,000 people, but it's like a very big swing to like get a new audience excited about crypto. So we are going to like continue kind of trying to fund these like big consumer swings, but like it's risky, right? And so a lot of people, I think, tend to shy away from it.
Yeah, absolutely. And there's a saying out there that the people who were investing in crypto 2 years back are now investing in AI. So I'm glad that you're sticking with crypto here, right?
Yeah, well, we don't have a choice because we
Yeah,
signed up for this. But look, AI, this stuff is really cool, right? You play around with ChatGPT, like it's hard to see that this is not a massive part of the future. But
right, right.
I think in some ways it's good. Like crypto is never going to be just like always hot, and so you know I think there's a little bit less bullshit in the industry now than there was a year ago, and so that's kind of nice.
Absolutely. And let's talk about portfolio construction and risk management, right? So when you're building a portfolio, what are the kind of things that you're thinking about? What's the composition and what are different kinds of components to have there?
So yeah, so from a portfolio construction perspective, we do not have like we will invest in anything in crypto. We don't have a specific mandate for a specific vertical, and that's by design, right? I think if you are in a industry dominated by power laws, you kind of want to have the broadest mandate possible. Now we are very honest about where we have an edge. I mentioned games, for example. I'm not a gamer. No one on the team is gamers. We're not really going to invest in games. Most things outside of Ethereum we don't think are interesting, and we're not going to invest there. We only invest in seed and pre-seed. So we do have a lot of constraints on what we invest in. Um, our rough view is like anything we do needs to be able to return the fund if we're right. And so generally, our current fund is $60 million, and we are investing $500,000 to $1.5 million checks in early stage rounds. And let's say we want to buy at least 5% of these companies on average. And they're like, all right, you have $1 billion outcome. That's 50 million back to the fund. Like that's pretty meaningful. And so like there's a little bit more complexity to the math, but that's really kind of how we think about it. Yeah.
Yeah, understood. And lastly, what advice would you have for someone who's interested in crypto and maybe wants to start investing in the space as a venture capitalist? So,
Yeah.
what would be your advice for them?
So crypto, I think, is one of the cool things about it is like it can be very accessible, right? There's like all these investing DAOs, like a lot of like funds kind of have like research or scout programs. And so I think if you're interested, just like honestly starting to write and like doing research, there's a lot of ways to kind of like get it in front of the right people. And like, we're hiring right now, for an example, as for an associate, and like the majority of people we're interviewing, in this serious manner, like they've done research, they've written about this stuff, like they've kind of like gotten in the mix of the industry. And so I think that's like the biggest thing to do.
Absolutely. And now let's move on to a rapid fire round wherein I'll ask you 5 quick questions about the fund and you have to give 5 quick answers. Sounds good.
Yeah, absolutely.
All right. So the first one goes, what are the sectors and regions you invest in?
Um, any sector within crypto, any region, like we're happy to look at anything.
Great. And what's the typical stage of investment?
Yeah, like pre-seed and seed.
And what's the typical check size you put in?
$500,000 to $1.5 million.
Where can founders apply for funding in case there's a direct way?
Yeah, you could just email me. Just Regan at Lattice.fund.
Okay. And lastly, where can our listeners follow you?
Twitter is the best place. So it's just my first name, last name, REGANBOZMAN.
Great. I'll make sure to put all those links in the show notes below. Thank you so much for coming on, Regan. It was great talking to you and happy investing.
Yeah, thank you for having me.
Yeah, pleasure hosting you.